Hello again, lovely viewers, and welcome back to episode 8 of the investment journey. The topic will be kind of different. We'll be taking one step back from the practical showing of how to invest in different investment products. Today I wish to speak about the investment mindset. So if you want to know more about that, please do sit back, relax, and tune in to the video. So viewers, for you to understand what I'm speaking about, first we will go to the financial markets. How are they moved? The financial markets is the pool which contains all the mutual funds which we spoke about, the index funds, the ETFs, all the stocks, the bonds. Of course, if you want to know more about stocks or mutual funds and index funds, you can click on the pop-up right here. But what moves it? You know that the market can go up and down. What does it mean? When it goes up, it means that the stock prices and the share prices are going up because the investors are buying in the market. When the market goes down, on the other hand, and the stock prices and mutual fund prices go down, it means that investors are selling. Because the market is basically a pool of traders who buy and sell at the same time with each other. The terms which are used in the financial markets are the bulls and the bears. The bulls are the buyers, so when the market goes up, so many people buy, it's a bull market. When it goes down and everybody sells, it's a bear market. So if you see in some news articles that say bulls are gaining ground or bears are gaining ground, that's what it means. And what do you need to know about that? The market is moved by two emotions, only two emotions. Greed, so people want more money, and the second one is fear of losing the money. So right now, at the crisis which we are in, it's more of a bear market, let's say, because fear is all around us. The tech stocks, which were all-time high because of the lockdown, are now going down. Investors are pulling back of them because their fear is too great for the stock price to continue rising. Right now, of course, they're switching to the opening stocks, let's say, because societies are opening everywhere. So you switch to stocks which have been closed till down. So airlines, or some shops, some big centers, hotels, whatever. But the problem is the greed and the fear. That's what I'm speaking about. And we, as an investors, want the greed to smash the fear, as you're going to gently smash the like button right now. If you like what you're seeing, please do subscribe to the channel. And from here comes the big mistake I'm talking about. When people think about investing and owning mutual funds and shares, you shouldn't think about money. You should think about assets. Many of the people who I started this channel about have asked me and have raised such questions to me. Plus some of you have commented and asked again. You are fearful of losing your money. So when we are in a bear market, as we are right now, the stocks go down by 10, 20, 30, 40% in some cases, and you're fearful that you're going to lose your money. And that's a big mistake, a big no-no. When you buy a mutual fund or a stock, because it's easier to evaluate it like that, when you own a stock, your money doesn't matter. Because you need to think of it in the way that you are a co-owner of the company which you have bought. So if a company or the stock price, let's say, because the stock price reflects the financial health and the prospects of growth of the company which you are owning. As an owner, if your stock goes down in price, that doesn't mean you're losing money. That means that the value of your asset which you own has gone down because of conditions which they are. That doesn't mean that in the future, in a week or a month or a year, the stock price would not go up and smash the new all-time highs and you will be in profit if we speak about money. That's a big mistake that makes people not invest and not be brave and go into the financial market because they think that they're going to lose money. All of the platforms and everybody who speaks about investing will tell you that they are risky, investing I mean, and that you can use your money. Yes, you can lose it, but if you invest in very, very risky stocks. Imagine the following situation. You are a proud owner of one share into Apple. Do you consider that sometime in the near future, in the 5 years, you are going to lose your money? No, because that means that Apple needs to go bankrupt and the company should not exist anymore. Will that happen? I do not think so. Another way of thinking about it is if you have a car, the cars depreciate. If you buy a new car, the moment you take the key and get it out of the dealership, it has gone down in price between 15 to 20%. So do you think that you've lost money when you bought a car? I mean, yeah, you have a car which costs, for example, 20,000 euro, and every year it depreciates by some percentages till it goes down, for example, to 10,000. But you don't think about it because it's a car, because it's not money, physical money. It's just an asset which you drive from A to B. Stocks are the same thing. You are an owner of a company or owner of a lot of companies which mutual and index funds. This means that you need to think like an owner. If you have your own business and it has some bad years, you don't just go down and sell your business and be over with it. No, you try to save it. And as an investor, the only way you can try to save a company is by not selling the stocks, because they use the money you've given them for the stocks to invest, to make new products, to boost their growth. So you should not panic sell, let's say. The biggest losses investors make is when a crisis comes, all the markets go down 40 and 50% and everybody sell everything they own. Because you say, oh, I'm going to lose, but if I sell now, I'm going to lose only 10%, not like 25 in 1 week. You don't know that actually if you're going to lose the 25. But because this panic sell occurs in every investor, which is a single person like you and me, everybody looks that the market goes down and they sell. And when you sell, you make the market go even downer, because sell issues more selling. As I said, bears issue more bears. If it's a bear market, everybody sells, everybody watches from everybody else and they sell. So the prices will never go up. That's why if you're thinking of selling, first think of the assets you have. If you have the company, do you believe that your company will be profitable in the next year or the year after that? If you think so, then hold the stock, do not sell it, even buy more, because when there is a crisis or stocks are on discount, so always buy more. Why is the takeaway of this video important for you? Because you should never sell. The idea for you is to make your research prior to buying the actual mutual fund or stock, so you actually know, or at least predict, that in 5, 10, 15, 20 years you do not need to sell it. You need it to do your research beforehand. If you didn't do your research correctly, then yes, selling a stock could be okay for you to not lose a lot of money. But the strategy you need to have is to buy and hold for the long term. Again, do not succumb to fear. Always be reasonable. Think with your head, not with your emotions. You have made a plan for yourself for the future. Even a mere financial crisis to come, it cannot disrupt your plan after 20 years. As I said, a single financial crisis on average lasts between 1.5 and 2 years. Do not be afraid, be brave and hold the assets you have bought, because you're a proud owner of some companies. I hope you liked the video today, and next week we'll be jumping again into more practical videos about buying stocks, mutual funds or bonds. We'll decide, I don't know yet, but keep tuned. and I'll see you next week. Thank you very much for watching, and bye bye.